Hello! Welcome to the very first episode with me where you finally get to see my face. My name is Jordan. I'm a millennial investor. Surprise, you guys finally get to see me. And while it may not be the best setup ever, we got the Wall Street Bets poster, we got the This is the Way, custom made by the way, Theta Gang poster, and of course we have lights, a cheap desk, but whatever, I'm proud of it. And so in today's video, what we're going to be going over is we're going to be introducing my largest position. Now, we're going to pull up my portfolio right now. And the portfolio that you think I'm talking about is my dividend growth portfolio. This is the one that I've been showing you guys alongside every single move. My largest, my smallest positions from top to bottom, from Broadcom being my biggest, from my smallest ones being like Waste Management, Verizon. But in today's video, instead of showing you guys a boring dividend stock, which I love investing in by the way, boring is fine, we're going to introduce you to my largest position. And it's not a dividend stock. And I'll tell you guys exactly why, but first, we have to crack open a Mountain Dew Baja Blast because you guys are going to learn quickly on this channel. I may like Mountain Dew. So, cheers. But anyways, what we're going to do on this video is we're going to go over the article that I wrote hand in hand, okay? So what we're going to do is we're going to show the article that I wrote for Wall Street Bets. Now the reason why I wrote this article had nothing to do with Wall Street Bets. The reason why I wrote it is that it would be informational for this video, and if you guys want to read it line by line, it will be in the description posted for you guys to read. So go ahead and check it out and read along if you want to. But the reason why I posted this is I wanted to give every reason why I love Tattooed Chef. That's right, you guys, my largest position is Tattooed Chef. Now I know you guys might love or hate this, especially being a dividend growth channel, but Tattooed Chef is the ultimate growth stock based on this portfolio that I'm doing. Now, most of what you're used to watching on YouTube is probably a lot of YouTubers that invest in growth stocks and either hold them for a long term or try to sell out of them for a quick profit. That's not what we're going to be doing in this video. That's not what we're going to be doing in the long term with my portfolio. Actually, we'll be discussing that in the next video and talk about how I'm going to be cash flowing my investments month after month and get paid to own growth stocks. I know, not dividend stocks, not getting monthly or quarterly cash payments in the form of dividends. We're going to be getting monthly and bi-monthly payments in the form of selling options income. Stay tuned for the next video. But let's jump straight into Tattooed Chef. This first picture here, this is an example of some of the products that Tattooed Chef has to offer. And I go ahead and talk in my little intro article here how I only want to invest in a growth stock if I see the opportunity to earn 15% a year compounded. Now that works out to about, over the course of 5 years, you will double up your money about every 5 years, about every half decade. So if I'm investing my money, if I'm going to take my risk out of a boring, safe, stable dividend stock, like a Home Depot, a Coca-Cola, a Pepsi, right? Which, by the way, Pepsi crushed their earnings. We'll talk about that later. But I want to invest in a company. If I'm going to take that risk, I want to see at least 15% year over year, and I believe Tattooed Chef is one of them. And basically, to give a rundown, to reiterate what's on the screen right now, basically they're a plant-based food company. They tailor towards people that are vegan, people that are vegetarian, and people that have plant-based diets. Now, all their products are very healthy, very good for you considering that they are frozen products. But Tattooed Chef is a company that I think is innovating so much considering they're just a boring food company, because this company is anything but boring. I'm gonna go ahead and pull up here on the screen and you can see that Tattooed Chef's revenue growth is $32.5 million in 2017, and then to 2018 it goes to $47.9 million, a 47.4% increase. 2019 goes to $84.9 million, 77% increase. 2020, $148.5 million, a 74% increase. Obviously, after that, when we get to 2021 and 2022, these are projected, but I think these are very accurate, if not even a little bit of a softball. I think that actually they could definitely beat these numbers. We'll be going over why in just a second. 2021 projected is $293 million, 61% revenue growth. 2022 revenue, $323 million, 35%. So across the board, 2018 revenue, 47% growth. 2019 revenue, 77% growth. 2020 revenue, 74, 61, 35. You can see that this company typically grows revenues something like 40, 50, 60+% a year. In the next paragraph, I talk about the growth number that everyone is ignoring. Because if you didn't do any research in this company and you just looked at the surface level numbers, if you just looked at revenue growth over the top of the year, right? If you just look at revenue growth year over year, that would not tell you the whole story for this company at all. The reason why that doesn't tell you the full story is that if you just look at the revenue growth, that doesn't tell you the number that is most important. I titled this next section, the growth number that everyone is ignoring. The full year 2019 revenue for Tattooed Chef branded products. Now what this is like, this is if Coca-Cola sold two types of products, okay? They sold one that was branded Coca-Cola products. That's their flagship product, that's what they're successful for. They obviously have other brands like Dasani and Tropicana and other things like that. But the reason why people buy Coca-Cola is because they're familiar with it. They trust it. Their father, their grandfather, their mother, their grandmother, their aunt, their uncle, their cousins, everyone drank Coca-Cola, so they decided to drink it too. Now what if Coca-Cola also sold its beverages not in a can labeled Coca-Cola, but just the actual physical product itself, just the nasty carbonated liquid? What if they sold that as a private label brand to some big beverage company out there, whether it's Pepsi or Monster, and then they sold that as a private label? That's not a winner in my opinion, because Coca-Cola doesn't sell its products for the taste of it. Now while it might have a good taste, people drink Coca-Cola because they know it, they're familiar with it, right? And so the same thing with Tattooed Chef that we have here. The reason why this company is successful is because of its branded products. 2019 revenue, $18.3 million. 2020 revenue was $84.6 million. I got a drink to that. That is a 363% increase. Even looking at quarter over quarter, let's see, third quarter of 2020, $22.6 million, a year over year increase of 288%. Fourth quarter 2020, $23.9 million, year over year increase of 172%. The first quarter of 2021, $36 million, year over year increase of 105%. You can see across the board, the way that this company is successful is not because of its private label products. The reason why this company is successful is because it has Tattooed Chef branded label products. And the reason why this company continues to sell incredibly large volumes is because people are loyal to the brand. Consumers are loving the engagement that they have with customers. They have great service teams. They have awesome products. And not only that, it's good for you. It's great for the environment. Tattooed Chef is one that is so far doing incredibly well, especially for a very competitive space like a Tattooed Chef where it sells only food products. Next, we looked at earnings potential / profitability. Now, I want to say that of everything that Tattooed Chef has done, the revenue growth is great, the brand recognition is great, the products, they move well, it has a great CEO, good financials. Of everything about this company, what's probably the most shocking is the fact that they are already profitable. Now, most companies that are growing at incredibly fast speeds, whether that's 20%, 30%, 50%, take pretty much any major growth company out there that you can think of that has went public in 5 years or less, including Tattooed Chef. Almost every single one of those are almost always unprofitable. It doesn't matter if it's a tech company, it doesn't matter if it's a food company, pretty much across the board, these companies are almost always losing money. They sacrifice margins and profitability now so that way they can grow their companies today and focus on profitability in the future. Now that's totally fine, but here's something cool about Tattooed Chef. The CEO, which we'll talk about here in a little bit, he has a history of running food businesses of 35 years. He's been running food companies for 35 years, and he's been doing it long before Tattooed Chef was a public company. The reason why he used to run food companies in the past was because he wanted to take care of his family, live a prosperous life. I don't know, maybe buy that nice Maserati that he wanted. Regardless, the food companies that he ran in the past was to take care of his family. And so if the food companies over here before Tattooed Chef didn't make money, then he couldn't feed his family. And so Tattooed Chef ran with those core principles of needing to be profitable for a boring family business, has in some ways carried over to today's public company, where the company is already turning a small profit and even having one quarter of producing tens of millions of dollars in profits. Don't believe me? Well, go ahead and take a look at this. Here's a photo that I posted once again in that article, and what it shows is the net income for Tattooed Chef. Now, it's a little bit skewed. The last couple of quarters, they've been really shaky, and the reason is they spun off their corporation from an S corporation to a C corporation. They also had a couple tax write-offs from that as well. I know that they also had some warrants that they received some cash from, and then also marketing and advertising for the first time ever is kicked in. The last 2 or 3 quarters are probably not the best representation, but you can see from the previous year, going back to, let's see, what is that, late 2019 and early 2020. you can tell that this company, the first 3 or 4 quarters, was gradually upticking in net income. And that is happening while overall revenue growth is growing 50, 60, 70% plus. And more importantly, their Tattooed Chef products, those are growing 100% or more. Now going forward, I'm gonna slap something on the board right here in 3, 2, 1. Oh wait, that's right, I don't have a live-in editor, so I gotta edit it. Go ahead and edit it, Jordan, now. This is the guidance for 2021 and beyond. Now there's a little footnote here at the bottom if you're following along, reading along. It says that photo is from December 2020. This photo is about 6 months old. And since then, the guidance has been revised upwards for 2021 and 2022. Now going back 6 months ago when they projected this on their investor day of 2020, they are projecting that by 2026, they will have 1 billion with a B, not with an M. They're going to the B's. They're going to be in the 1 billion range by 2026, which is half a decade from now, 5 years out. Now looking at 2021, the original projected revenue was $222 million. That has since been revised upwards thanks to their acquisitions and also just selling more than they projected, especially in their target locations. Now you can see, instead of breaking it down number by number, you can see, generally speaking, revenue growth is looking year over year 20, 30, 40% plus every single year for pretty much the next half decade. That's what the company's projecting. And so far, I know it's still early, but so far, they have not only been meeting those expectations, they've been actually beating those expectations. And so the possibility of this company getting to 1 billion in revenue by 2026, 5 years from now, I think is very possible. And I think that the fact that they're projecting gross margins of anywhere from 20 to 35% over the next 5 years as that steadily goes up, economies of scale, of course. But as that tends to happen, these companies become more profitable. They no longer have to go through the growing pains of expanding and building new factories and hiring loads of new trained employees that, well, frankly aren't trained. But this is the growing pains that is usually experienced with high growth companies, usually in the tech industry. This is a food company. They sell frozen food products, and they're about to sell more than just frozen food products, but more on that in a sec. But anyways, I wanted to talk about the profitability of the company, and I just used some really rough numbers. You can toy with these on your own if you want. Now, I know that these numbers can be toyed with a lot, and these are just projections, so take that as it is. These are just rough estimates, okay? So don't kill me. They could be way better, way worse than this. I can't tell you what investors are going to be pricing Tattooed Chef at in 2026. They could be so optimistic and price it double or triple what I'm projecting, or the company could just flat out outperform. Or the other scenario is that they could really do bad and start to lose some of these deals and not be nearly as profitable as what they're saying they are, or what I think they will be. And investors could really be pessimistic on them, and they could be 40%, 50%, 60% lower than what I'm projecting. So keep in mind that these numbers are just some rough estimates so you can get an idea. If this company were to do 1 billion in revenue in 2026 like they're projecting, and I think they will, if not slightly beat that, let's say that 10% of that goes to net income. That goes to the bottom line as their net earnings, their earnings per share, okay? Now, I know that generally speaking, comparing to one of their competitors, as I mentioned in the article right here, that normally about 5% is normal for, say, like one of their main competitors, like a Tyson Foods. They're a big dog, they've been around for decades, and they produce a lot of the same boring frozen food products that Tattooed Chef is competing against. But they usually keep about 5% on the bottom line. Now, we're gonna use 10% for Tattooed Chef instead of 5. Jordan, why would we use 10% for Tattooed Chef instead of 5 when Tattooed Chef is not even nearly as big or nearly as profitable as the Tyson Foods? One main reason. I got 2 words for you. Vertically integrated. This company is vertically integrated from top to bottom. It doesn't matter what you look at, whether it's packaging their products or designing the food themselves or coming out with new SKUs, which is the fancy way of saying products. It doesn't matter what it is. Across the board, this company does it all. There's no outsourcing. There's no hiring other marketing teams to decide how they should brand their products or come out with new ones. Tattooed Chef does it all. They're vertically integrated, which will allow them to be more profitable if they get to the size of a Tyson Foods. They are likely to be much more profitable strictly because of the fact that they are vertically integrated. And I'll show you 3 numbers on the board here. This is based off of a 20, a 25, and a 30 PE ratio based off those numbers. Like I said, just examples. And if that's the case and investors were to price them based off of these numbers, that's what it would look like in terms of price target. Now, I think price to sales is probably a better metric to use here rather than PE ratio, because let's be honest, a company growing at this speed is better for price to sales than PE ratio, but it's just to get an idea. Next up, we have the CEO and creative director, Sam and Sarah Galletti. These two are absolutely awesome to watch. Just like I was saying a moment ago, the CEO, Sam Galletti, has 35 years experience in the food business. Now, rather than try to give judgment on his character or how successful he's going to be, I'll just show you this picture. This is on their website. You can read about him. I'm not going to judge a man's character. I'll let you decide for that. But I think he looks like a credible and very intelligent CEO that definitely knows what he's doing. And I think the rest of the management team, I could say that as well. So I'll let you get your opinions on that, but I think that's a pretty good take in my opinion. 2020 price to sales ratio is a little under a 7, 6.89 to be exact. And then if you look at the 2021 number, it's basically a 5 times price to sales for a company that's going to be growing revenues 30, 40, 50% every single year, if not into the next decade. What? A 5-time price to sales ratio, in my opinion, is a steal for a company that is growing this fast and has such a good business model. Once again, trying to argue about valuation to investors. Some people will love me, some people will hate me. Some will be on the total end, think that a 5 times price to sales ratio is ridiculously high. Others will think it's ridiculously low. If I had to put it on a scale of 1 to 10, 1 being so undervalued that it's just crazy, and 10 being as overvalued as a Tesla or a Shopify, I'd put it as like a 3 or a 4. It's definitely leaning on that undersided level in my opinion, especially compared to competitors, but it's not anything that's just crazy, like if it was a 2 or a 3 price to sales ratio. Next up, we have mergers and acquisitions. That is a big focus for this company, especially with all the cash that they have. They're cash loaded to the sky, by the way, more on that in a minute. But they just acquired the Carson Tortilla Factory as well as New Mexico Food Distributors. Now, this is just one example of what this company will be doing over the next decade. And I don't really care so much about this deal in terms of what types of revenue it produces. Which, by the way, they said it's going to produce up to $200 million in revenue annually, and they spent $35 million to acquire it, which is crazy, right? They spent $35 million, and they're going to receive $200 million every year once it gets fully up and running. That is a sweet deal if you ask me. But the reason why it's so incredible to see is that it shows a glimpse into the future that this company is going to continue to innovate and acquire other big businesses, spending millions or maybe in the future billions of dollars to acquire other businesses. They bring on their resources, they bring on their financials, they bring on their relationships with other business partners, and I think that this is a great foot in the door, and looking into the future, I think we're going to see a lot more of this, and this is not just a one-time deal. I think this is going to happen many times over the next 5-10 years. Now I want to talk about the new deals that they just got, because if you notice that they just got a deal with Whole Foods. They're now in Whole Foods, they're already in most of the big box retailers, they're already in Walmart, they're already in Sam's Club, they're already in Target, which by the way, piece of news, Target said that Tattooed Chef was, quote, the most successful frozen food company in the history of Target. Tattooed Chef products, according to Target, were more successful than any other frozen food product that has ever been in Target. That is crazy to hear from a company like Target ever say something like that about anybody, especially a company that is my largest holding. I was actually invested before they even said that. When I heard that, I was just, what? That is crazy. But they did just get into Whole Foods. This deal isn't massive, but it is once again just another foot in the door. They're only allowed 2 SKUs or products at the moment. Not a big deal. I mean, it is a big deal, but whatever. It's good to see these signs of good faith that Whole Foods is now allowing them to sell their products. But then the real deal is what I found out actually before it was announced. Me and the other people in this Discord chat that I'm in that is full of other Tattooed Chef shareholders all found it out beforehand. Kroger will now be selling Tattooed Chef products in 1,800 stores, and each one selling 12 different products each. This company is going to make millions of dollars just off of this one deal. I think that not only will they make millions of dollars in revenue, but I think potentially they'll even make millions of dollars in profit in the future from this deal. Now I'll just go over this briefly. You can read about it in where I wrote about it, in the Wall Street Bets if you're reading along still. But they are coming out with new products all the time. The main talk of the town right now is that they're going to be coming out with snack products that is later in 2021, if not early 2022. I'm thinking that quarter 4, the last couple of months of this year, they'll start releasing snacks. Now that is going to be a very profitable business, probably more profitable, no, it will be more profitable than the frozen food products that they already offer. But the fact that they have these relationships early on thanks to their frozen food products, it gives them an advantage in trying to sell their snack products as well. So that is great news once again for Tattooed Chef. Now, that is not the important part. The important part is that throughout all of this revenue growth, they have done it with this much marketing spend. In case you didn't see it, that's a $0 in marketing. They have not spent any money whatsoever on advertising or sending ads directly through Google or YouTube like you're watching on this video until this year. Until the last couple of months, I believe they started in April or March. They started advertising finally. But until then, all of this growth has been with $0 in marketing spend. And so next up we have the balance sheet. Now I know trying to go through all the nuances of a balance sheet or all 3 of the main financial statements, it's boring. It's stuff that normally people don't want to listen to. But the balance sheet, I know that if you watch me in the past, 2 of the main things that I normally try to focus on is the cash on hand and the long-term debt. Now the reason I like to do so is because it gives me an idea of the financial health of the company. Now go ahead and take a look with me over here, and it says that $185 million is currently in cash, just sitting in their account, ready to go. And they only have, was it 1.9? Yeah, 1.9 million in long-term debt, while they have cash of 185 million. So this long-term debt is so small it's basically irrelevant. So basically none. They could pay it all off without even using 1% of their cash. It's basically nothing, right? So they have almost no long-term debt and they're cash loaded to the sky. So how big is their cash position, you might ask? Well, this company currently sits at 1.6, 1.7 billion, depending on how the market trades that day, as of the time that I'm filming this video. As of around $20 a share, yeah, that's about a 1.6, 1.7 billion. Now their cash is $185 million, which means over 10% of this company's value is cash, as in cash in a checking account. Now, this company's financials are incredible because not only are they profitable, not only do they have no long-term debt, they don't have a massive debt load or they're not diluting shareholders in a massive way, but they also have almost 200 million in cash and over 10% of this entire company's value. The market cap, what investors are valuing the entire company at, almost 10% of it is cold hard cash. That is bananas. It's insane. You almost never see that large of a cash percentage ratio of a company relative to its market cap. I mean, what is this, Berkshire Hathaway or Apple? Obviously, Berkshire Hathaway got a little bit of money. Same for Apple. Okay, last but not least, we have the total addressable market, or the TAM opportunity. Now, I want to go ahead and read off. This is the main photo. I'm going to show it on the screen right now. It says that vegetarian diet grew 1%. The pescatarian diet, which is the only one that Tattooed Chef is not involved with, grew 0.5%. The plant-based diet, which that's the big one, that's the most important for Tattooed Chef out of these 4, which grew the largest of them all at 1.6%. Vegan diet, 1.7. Oh, sorry, actually I was wrong. So vegan grew slightly ahead. But anyways, you get the point. Vegetarian, plant-based, vegan, the 3 that Tattooed Chef are really focused on, all grew at least 1%. 1% for vegetarian, 1.6 for plant-based, and 1.7 for vegan. That is all very good because regardless of how successful Tattooed Chef is, people are going to shift away from old traditional carnivore-like behaviors with eating meats, right? And now they're switching to more plant-based, vegan, vegetarian lifestyles. And not only that, but they'll be addressing the $55 billion market in the frozen food category. Like I said, they're going to be expanding into snacks and other categories as well, but you can just see that the TAM, the total addressable market, is huge for this company. And I think something that's really important here is that it's talking so much about vegetarians, vegans, plant-based diets, and obviously that's their main focus, that's their target market. But you don't have to be a vegan to eat Tattooed Chef. You don't have to be plant-based to eat Tattooed Chef. You could just be a normal guy or girl that just wants dinner. Maybe you just see the brand, regardless of whether or not it's plant-based or vegetarian or whatever, and you just want to try the product. And you like the product. Maybe you just want to eat healthy, but you don't have those strict lifestyles that you want to follow. That's okay. Tattooed Chef can sell to literally anyone. It's not restricted to males or to females or too young or too old or rich or poor. Almost anyone can afford it. Their products are very affordable. They're available as of now almost everywhere, and they fit almost any dietary restriction within reason that you can imagine. And so with consumers shifting their habits towards less meats, having more healthier lifestyles, and overall this company just really being set towards taking advantage of consumer trends that's going to be happening over the next 5 years, 10 years, I think that it really sets this company up massively. And so between everything that we mentioned, maybe if I can rattle it off the top of my head, between massive revenue growth, even bigger revenue growth for the branded products, which is really important here, the massive capitalized balance sheet, massive cash load, already profitable, great CEO, father and daughter led, experience in the food business of over 35 years with the CEO. Awesome deals recently announced, including Whole Foods, the big one that was announced, which is Kroger, that is going to be huge, as well as lots of others that they've gotten in the last year, acquisitions from the Carson facility, New Mexico Foods. All these things add up to what I see as a company that is capitalizing and just clicking on all cylinders. Now, that said, let's talk about the potential risks for Tattooed Chef. Because like any business, there's positives and there's negatives, and I definitely realize that this company is not perfect, not even by a mile, okay? So I want to talk about the risk for this company. Normally, a lot of times with YouTubers, especially those that are hyping up growth stocks, which I'm definitely not trying to do, I'm just discussing my investment. I want to talk about the risk as well, which usually does not get discussed. So here's the risk for Tattooed Chef. One of the few things that I don't like about Tattooed Chef mainly boils down to two things, and I'll name those first two up front. The main one is that it is extremely competitive. In the sense that I said that they could sell to almost anyone, well, so could anyone else. Whether that's a Tattooed Chef or a Tyson Foods or a Blue Carrot like one of their competitors, or an Amy's is probably their number one competitor, or really just anybody that's up and coming out of the market. Really anyone could come up into the space and try to create a better mousetrap. Now, basically the reason why people buy these is because of the brand, and that's really the opportunity here. But that said, there's a 100% chance that competition is going to be ruthless. In the same way that Tattooed Chef knocked all these competitors out of shelf space to get more room for their products, everyone else is going to try to be doing the exact same thing to Tattooed Chef. So extremely competitive. The second big risk is that it's low margin. Food businesses in general are low margin businesses. You're not going to see profit margins of 30, 40, 50% like a lot of software or internet companies or e-commerce businesses usually do. This is the type of company where you're looking at profit margins being probably somewhere between 5 to 10%, an absolutely amazing number. Maybe one day after a decade plus, maybe they could get up to 15%, and even that's stretching it a little bit. This company, while it may be pretty profitable considering the amount of growth that it's had, especially being on in the early stages, profitability will never be astronomical, I would say. It will never be like an internet company, and that's to be expected. Those investing in this company, that's why it has a lower valuation. A 5 times price to sales ratio is so much lower than a lot of these SaaS companies, these software companies that are trading at 10, 15, 20. I mean, heck, like one of the companies that I really want to invest in, like CrowdStrike, I believe they have like a 25 times revenue multiple. Some even go way higher than that. So just know that with Tattooed Chef, this will be a low margin business pretty much more than likely until the day that it dies. I've seen here from the rest of the article, let's see, I also wrote that Sam and Sarah are pretty much the backbone of this company, the father-daughter relationship, the CEO, the creative director that they are. If they were to have something happen to them, God forbid, we're not going to pray for that or hope for that whatsoever. That we hope that doesn't happen. They're very good people, at least from what I can tell, and obviously I have an interest in these people as I own stock in the company. But if something were to happen to them physically, as in, you know, no longer with the company, or if they decided to part ways, I think that Tattooed Chef would really suffer. In the same way that Tesla would no longer be what it is with Elon Musk, or without Elon Musk, I should say. I don't think Tattooed Chef would ever be the same without Sam and Sarah, so take note of that as well. Now, I also believe that plant-based diets and vegan and vegetarians are growing, and pretty much all the data shows that it will be growing. But if those were to go down in popularity, if it's not a trend, if it ends up being a fad, which I think the data points against that, but just saying it is a possibility, that would definitely hurt Tattooed Chef. Another thing is inflation. This pretty much goes with basically all companies out there, but Tattooed Chef, once again, being a low margin business, they are subject to inflation fears. If not only the fear of the market fearing about inflation, but actual input costs themselves going up, this could definitely affect Tattooed Chef in a negative way, once again hurting their margins or them having to raise prices to consumers, which would more than likely happen, which most companies are doing right now. And then last but not least, this is a little bit kind of goes for all securities, but I just thought I'd mention it. The risk-free rate of return, as in what you can earn with taking on no risk, which is what a lot of banks and even a lot of investors do that are much larger than me. The risk-free rate of return drives the valuation of pretty much all equities. If the risk-free rate of return were to increase, which is the fancy way of saying if interest rates were to go up, companies that have profits that are valued far into the future, which Tattooed Chef is one of those, would definitely have their multiples contracted. If interest rates were to go up 1%, 2%, Tattooed Chef would definitely be going down in valuation. There's no doubt about that. As with pretty much all equities, so that's pretty much take that with a grain of salt. So I mean, it doesn't really matter what you're invested in, but Tattooed Chef would definitely get hard from that. But that's all there is for Tattooed Chef. That's all the pros. That's all the cons. I own 700 shares of the company. I don't even think I mentioned that at the beginning of the video. I own 700 shares at an average price of $17.21. I'm showing it on the screen for you right now. I also have calls that are sold against my position, so that way I can generate monthly income, and we'll be talking about that in the next video. But overall, guys, it's a very bullish position. Buying today at $20 a share, roughly what it trades at right now. So what did it close at today? Let's see. Tattooed Chef closed today after hours at $20.65 according to Robinhood, which I know, Robinhood, it's the worst. I hate it too, but it's what I'm using for now until I can open up my new brokerage. But $20.65, in my opinion, has a lot of value. Where I really liked it was when I was buying it at below $20 a share. I averaged out at $17.21, which in my opinion is incredible. So I believe that with that average rate of return of 15% a year compounded, I am believing that this could be a $35 stock by 2026, and I will stand by that. Regardless whether or not, once again, talk about it more in the next video, I'm going to be generating monthly returns from this company, even if I'm wrong. If it never moves $1 in share price, if it stays at $20 a share for the next 5 years, I'm still going to make decent returns from this company, and we'll talk about that in the next video. But thank you guys so much for watching. I hope you enjoyed this first video of watching me. Once again, I know it's not the best setup, but it's mine. You know, it could be better. It could be worse, as you know. I mean, you guys have watched me for the last year plus with no camera and no microphone. So the one thing I will say is that I know that it's pretty echoey in here. I apologize. I'm currently working on that. I'm not fully done setting up the room. And thank you guys for watching. I appreciate it. Make sure to sign up below. They're having a promotion for $50. Right now, if you get signed up, you can get $50 for getting signed up with them on finance. That is the largest they've ever done. The normal promotion is 10. Right now it's 50. That is massive. I can't even describe how large that is. So take advantage of that down below. Other things as well as reaching out to me. Credit card referrals, you got savings accounts, whatever. Check it all out down below. Thank you guys for watching, and I'll see you in the next one.